This is the easiest way to build a strong stock market portfolio. In this video, I will cover the best stocks to buy for a strong portfolio and also buying long-term call options on these stocks to maximize your portfolio's growth potential. You can do this on any platform, Robinhood, Webull, TD Ameritrade, any platform where you can buy stocks. So let's not waste any more time and talk about what to buy. Most people look at the stock market as a mix of jumbled letters and numbers and charts and lines, and then they get scared and hire a financial advisor to tell them to buy the S&P 500. Okay, maybe not that last part, but most people look at random companies in the stock market and have absolutely no clue what to buy. You can always buy an index fund like the S&P 500, but they have an average annual return of 10%, which, I mean, come on guys. It's 2021. People are making thousands of percents trading options. We want a little more than 10% a year, alright? And the reason why index funds have such low returns is because they are heavily diversified. Diversification decreases risk, but also decreases return. Remember that. Buying only the top 10 stocks on the S&P 500 will concentrate your portfolio's returns, but also your risk. You can also buy the top 20 or 30 to lower your risk, or you can just buy the top 3 stocks on each sector to maintain growth, but also have exposure to other industries. So right now we are taking a look at a map of the S&P 500. You can just type in S&P 500 map or go to finviz.com/map to find this, and pretty much this will show you the S&P 500 in a map. So here we have all the sectors and all the companies we can see in technology: Microsoft, Apple, Nvidia, communication services, Google, Facebook, consumer cyclical, Amazon, Tesla, just tons of great companies here. And this is where you're just going to want to be looking for the best stocks to buy, because you don't want to be buying like shitty penny stocks, low cap companies that just have like crazy wide bid-ask spreads. You just don't want that. So S&P 500 map, this is where you can find the best companies. So looking at the top 10 stocks, we see Microsoft, Apple, Google, Facebook, Amazon. We have just, these are all tech companies. But then you could also go to energy, you got gas stations, banks, healthcare, entertainment, railroads here, chemicals, just so much stuff. So right here I have a list of the top 10 stocks on the S&P 500. So we have Apple, Microsoft, Amazon, Facebook, Google, Tesla, JP Morgan, Johnson & Johnson, Walmart, and Nvidia. So these are the top 10 stocks just based on market cap in the S&P 500. So you could choose these and they could be your picks. Now, the problem with buying the top 10 stocks on the S&P 500 in today's current market conditions is that there has been a recent shift from growth to value stocks due to growing concerns about the Federal Reserve raising interest rates as long-term treasury bonds continue to sell off. Since most of the top companies in the entire world happen to be tech companies, which are part of the growth stock category, they have been getting hit pretty hard, and we'll go over that in the charts in a few minutes. Warren Buffett says that high interest rates are like gravity on growth stocks, and the reason that we saw such a strong rally in growth stocks, most importantly tech stocks, after the coronavirus market crash was due to extremely low interest rates. We can see here on the NASDAQ that at the start of February, this thing had a very, very large correction, while at the same time, TLT, which is the 20-year Treasury bond, also dropped very, very hard. We must note that this is not over, and inflation fears are going to continue to come up in the market and scare tech and growth stocks. So now you're probably wondering, what stocks do well during these market conditions? Let's take a look at JP Morgan, a bank stock. During February, this thing ripped. Bank of America, during February, ripped up. ExxonMobil, gas station, oil company, ripped up. Chevron, ripped up. Wells Fargo, ripped up. This is the S&P 500 financial sector, ripped up. S&P 500 materials sector, ripped up. Now that we have a clear view of what stocks do well during a high interest rate environment, let's build a balanced portfolio that will maximize growth and minimize risk. Here's a list of the top 3 companies that will perform well in a high interest rate environment. And because it's always good to have some tech exposure, here are my top 3 picks for tech. Feel free to pause the video and write down these ticker symbols here. Now that we have a strong, balanced portfolio that can maintain growth, let's get into how you can maximize your leverage with low risk. So the best way to maximize your leverage with all of our picks that we have is to just buy long-term call options on them. So we're going to do that on the on-demand feature in Thinkorswim, so you guys can actually see how they would perform over the last year. All right, so we're looking at Microsoft Trade. Here's the options chain here. And we're going to choose a call option that expires in, I guess, we'll choose 2 years out. So 5, 10. So I'd say the 130 call looks really good. So we're going to go ahead and buy this, $5,000. All right, so we just bought it. And we can see here, we have the Microsoft call that is in the money. Alrighty guys, so I'm done placing all the positions. We can see here that we have spent around $80,000 on all of these call options. So the date right now is May 4th, 2020, and we are going to skip ahead to the most recent date available, which might be like May 13th, May 12th. Alright guys, so now it is May 13th of 2021. Wow, we can see that our net liquidity is $253,000, so we have made a total of $153,000 in all of these call options. So since we turn about $80,000 into $150,000, that's about 180% return, 180% profit. So that's what call options can do, guys. If we were just holding shares, it might have been something like 60 or 70. But yeah, that's how you maximize your leverage, guys. Alrighty guys, that's it for the video today. I hope you learned something, and I hope you can implement my strategies with long-term call options and buying other stocks other than tech to hedge against inflation. So if you learned something, comment down below what you learned, and if you like this video, drop a like for the YouTube algorithm to show more people my videos. Subscribing and commenting also does that. And yeah, I'll see you guys in the next video.